I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. China's appetite for soybeans failed to slow down as imports hit another record in 2025. Monthly trade data showed that China imported 111.8 million metric tons of soybeans last year, up 6.5% from 2024. Imports from Brazil were also a record after rising 10% year over year. Shipments from Argentina nearly doubled and hit a 7-year high. Meanwhile, soybeans from the U.S. fell 24% from 2024, hitting a 7-year low. China has been increasing its imports from South America over the past few years to reduce its reliance on U.S. supplies. Shipments from the U.S. accounted for just 15% of last year's total imports, compared to about 74% sourced from Brazil. Rising demand from China has led to record soybean exports from Brazil, with shipments from the country doubling over the past decade, led by growth to China. The Office of the U.S. Trade Representative announced last week that it signed a trade deal with Taiwan. This reciprocal trade agreement will eliminate tariffs and non-tariff barriers facing U.S. exports to Taiwan. The deal will immediately eliminate tariffs on imports of U.S. beef, dairy, and corn, according to the tariff schedule released by the USTR. Some tariffs included a 40% tariff on pork belly and 32% tariff on ham that will only fall to 10%. The agreement confirmed that the U.S. will leave a 15% tariff rate for imports from Taiwan, as Reuters reported. The deal still does need to be approved from Taiwan's parliament and could still face opposition. The U.S. exports about $650 billion of beef annually to Taiwan, representing about 8% of total shipments. Reducing barriers could raise export potential, according to the U.S. Meat Export Federation. U.S. MEF President and CEO Dan Halstrom says the agreement could also increase access for pork exports to Taiwan, which have faced tariff and non-tariff challenges.
We face a real issue with consumer acceptance of U.S. pork in Taiwan, and this will go a long way and not only get us on a level playing field tariff-wise, but hopefully helping us to improve the perception of U.S. pork in Taiwan. Definitely like to thank the Trump administration for their continued work to break down barriers for trade access, and any market that we can grow will work to the advantage of the U.S. cattle and pig farmer.
The latest deal is a step forward of improving the perception of U.S. pork to Taiwan, as Halstrom had said. The USDA kicked off its 2026 Ag Outlook Forum on Thursday. Part of that annual meeting includes a preliminary look into the upcoming growing season, including acres. The USDA projects corn acres to fall nearly 5% this year to 94 million acres, normalizing from the lofty 98.8 million reported in the previous season. The average yield forecast was pinned at 183 bushels an acre, up from the typical February guess of 181, following record yields reported this past season. Meanwhile, soybean acreage is expected to rise 4.7% to 85 million acres. USDA said expectations for higher soybean acres this spring reflect strong profitability compared to other crops, as well as normal crop rotations. Wheat acreage is declining slightly to 45 million compared to 45.3 million acres seen last year. USDA said combined spring and durum wheat acres are expected to shift slightly in the northern plains to prioritize soybeans. Thursday's numbers serve as a starting point for the USDA's outlooks moving forward. The agency will issue its first survey-based acreage estimates in the March prospective plantings report at the end of next month. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.